think it's 4 o'clock. We can start now.
We can. And
Chaitanya?
Please start.
Hello everyone. I welcome you all to GCC FinTech's webinar on economic substance regulations. As we know, there have been major amendments in ESR. So the focus of today's webinar is to discuss those amendments and its impact on preparing the ESR report given the new guidelines and the law. Before I introduce our guest speakers, just a quick run through about the webinar basics. This webinar is for 45 minutes, followed by 15 minutes question and answer session towards the end. You can use the chat facility to type in questions, and we'll try to take in as many questions as the time permits. Coming back to our speakers now, we have two guest speakers with us today, Mr. Jaiprakash Agarwal. He is the director at FAME Advisory, and he'll be discussing the changes in ESR law. Second speaker for today is Mr. Neerav Shah. He is a director. He is a director at FAME Advisory too, and his focus will be on examining what all is required to prepare the ESR report, keeping in mind the new law and guidelines. So over to you, Jay.
thank you. Can I share my screen now? Yeah, that's fine. Okay, I'll just share my screen. So first day of the week, everyone is feeling the heat of the first day. No, not feeling the heat. Normally after the break, when you have to start the day and you're asked to attend a session, that is not the right day to start. That is on Sunday. But fortunately, unfortunately, I mean, today we all are here to discuss ESR. So as Anu rightly said, we'll be discussing economic substance regulations. Yes, there are changes. What changes there are in, and what are the repercussions if you don't do it, what is expected from you as a licensee. That is what we will discuss. We have divided in two parts. One is updates. Why we are only sticking to updates is because we have done a lot of stuff on ESR earlier. When first notification was due in June, we did a lot of seminars, and not only we, everyone was doing across UAE, and you have a lot of information about economic substance. You have gathered a lot of knowledge around economic substance earlier. So this update is just because there is a change, and there's a major change. It's like, I mean, a movie was getting released by Shah Rukh Khan, and now Shah Rukh Khan has been replaced with Amitabh Bachchan completely. So this is the change, and that is why we are discussing about the updates. And then we'll follow with what exactly you have to do in terms of report preparation or your system preparation, so that you can be compliant in terms of economic substance. How we have done it is, we have divided the entire section into these parts. We'll start with amended definitions. What has changed for you? What are the relevant activities? Only the updates, not all the 9 we'll cover, because I think most of us who are attending here knows about these relevant activities. So we'll discuss what exactly changed and where exactly you should be cautious of. And after that, I think Neeraji will take you through offenses, what exactly the penalties are if you're not able to comply with it, what different authorities have come in. I'm telling you, as I said earlier, it was only Shah Rukh Khan. Now, along with Shah Rukh Khan, there's Amitabh Bachchan in the movie. So who is that Amitabh Bachchan who is pitching in? That is various authorities. We'll talk about economic substance report, what is expected from you in terms of reporting and notification, and then action points or likely issues which we think is there. This is the content. 45 minutes, 15 minutes will go for Q&A as promised. So in 45 minutes, we have to run everything. So we'll go a little fast. I will start with a little background, small background. For anyone who is new, if you know about it, you can take a seat back and relax saying, Jay, I know all this about. The entire journey started in 2019. Before 2019, UAE was considered blacklisted. Reason being, there was no compliance. There was no economic substance compliance, and there was profit parking. There was no tax, right? We all know that there is no tax in UAE. And that is the reason profits were getting parked for some reason or other. I will not explain you the entire stuff. There's a lot of information available. A lot has been discussed around the year, starting from January 20 till September. So it's the journey started in January 2019, where we said to UN that and BEPS that we will comply, and all my entities will comply with economic substance regulations starting from 1st January 2019, which meant that for the period January 2019 to December 2019, we'll make the compliance in 20. What happened is, after we committed the deadlines, we went ahead and saw the new regulations coming out on 30th April 2019, which was called Cabinet Resolution number 31 of 2019 concerning ESR. This was the initial law which came in 30th April 2019. That time you have seen seminars around it to tell you what exactly economic substance means, right? After that, 12th September 2019, Ministry of Finance came forward. They were the father of these stuffs. They give you the first guidance note saying this is what we have to do and how exactly you should interpret the law or relevant activity. Followed by that, what happened again, January 2020. Why January 2020? Because first period of June 2020 was nearing and we have to do the compliance, or March 2020 was near, we have to do the compliance for the periods ending in June 2009. The periods which have ended in June 2019, we have to do the notifications, other stuff. Or December 2019, the periods ended, we have to do a notification by June. That is why the frequently asked questions or FAQs started coming in to address your queries. And then first filing was done in June 2020 for the period ending on June 2019. That is what, or December 2019, I'm sorry. For the period ending on December 2019, we did the first compliance in June 2020. All of a sudden, what happened? In August, I mean last month, they changed the complete law. They said, forget about 31, don't look into 31. I'm giving you a new cabinet resolution number 57. Please go through it. Why? Because there were something which devs came along and said, this is not right. The way you are interpreting the law, the way you have written the law, I think there is still some gaps. This is not in line with our action points. And that is why please revise it. And that is why we are seeing cabinet resolution 57 coming in. That is the history from 31 to 57. Today we will discuss what changed from 31 to 57, not the entire law, only the change part of it. Before going through the change part, let me put all the relevant activities here. I'll do it quickly. See here, all these are 9 same as it is from first to second. Nothing has changed. All 9 activities are covered. I will give you just a small hint because time is a paucity here. Remember this chain. I have created a chain between headquarter and distribution service center. Remember this chain. I will tell you going forward in one of the slides why I've created this chain. Just remember this chain for me. And second, I call it mass. Distribution service center is where the mass is sitting and you might be impacted. So remember this mass people. I'll be covering in these slides what exactly this chain means, what exactly this mass means. All the activities remain same. Only thing is the meaning or interpretation has changed or has been widened. And that is what we will see in terms of economic substance regulation. Now, what has changed? Initially, the definition of licensee, that is the people who will be covered, was anyone who is doing these relevant activities, all the 9 relevant activities. If you are doing it, if you are into banking business, insurance business, or shipping business, or any of the 9 activities which was listed there. What exactly it means, I'm not deliberating just because I'm assuming that you have already well versed with economic substance, which was released earlier, because you have already filed a notification on 30 June for 2019. That is why you know about it. The definition earlier was natural and juridical person, which means that as a human being, as a natural person, if I am doing a business, I have set up something without a separate LLC company, without a separate limited liability partnership. As an individual, I have registered. Assume I am a local here. I am a Emirati here. As an Emirati, I can go for a sole proprietorship business, and I have dealt into it. Then I was also covered in ESR. I also did a compliance. That is what I filed a notification for this. Both natural and juridical person did this. But now in the revised guidelines, what has changed is this is the new definition. If you see, the word natural has gone. Now a person who is into sole proprietorship or he is doing on his own without creating a LLC, LLP or any other form of legal structures is taken out of the ambit, because as an individual, you have a passport, you will be covered under that passport. You will have to apply the tax status of based on that passport which you are holding. There are different reasons for it. So natural person is out, only juridical person is covered. Interesting is it says incorporated inside or outside, everyone is covered. If I have set up in India, it is also covered right now. I mean, this is the first definition. Don't worry, I'll give you the second definition and then you will understand those entities have gone out. Earlier they said, they first expanded the horizon completely. They said all the juridical persons, whether incorporated inside or outside UAE, everyone is covered. Second, they talked about unincorporated partnership. This is the addition. Earlier, these people, like if you remember, we are sitting in an Islamic country. We have seen Mudarba here, Musarkar here. What is that? These are basically a contract for profit sharing based on understanding. You don't need to create a legal form. I can take a partner. I say, okay, I'll put in the money, you put in the labor, we'll share the profits. This is an agreement. Based on the agreement, I can form this contracts and do the business in UAE. Though this is not a legal structure, they were going out of it. They were not required to do a ESR compliance. They have been brought into this ESR by saying unincorporated partnership. It's not a listed one. You don't have a trade license. You entered into a contract for where you are putting in a capital. Second one is putting up funds. Can be any way, has been included now. Natural goes out, unincorporated partnership comes in. This is the first change. And remember, all types of juridical persons are covered, whether inside or outside UAE for now, right? This is the definition of licensee. What has changed? They have, after including everyone, they started giving exclusions. They said, okay, I have covered everything. Now let me give some exclusion. Let me allow someone to go out. How exactly they started with? They said, okay, this was earlier definition. If you see earlier, they said only government companies, only companies where government holds 51% share will be out. Now this has been repealed. This does not exist. What exists, what has changed is this. It says investment funds. So they have covered everything. They say if you have an investment fund and you are earning income out of investment fund, what is investment fund? Where everyone is putting in money, okay? And that whole chunk is invested in some other equity and other investment avenues. And there you are getting a return for that investment fund that goes out, that is out. They will be not covered here. Second, a licensee that is tax resident in a jurisdiction other than the state. State here means United Arab Emirates. So if a person is a tax resident anywhere across the globe, goes out. So in the first definition, they have covered everyone, all the juridical person across everywhere. And now in under exempted license, they said, please go out. If you are already registered somewhere else, if you are already complying with tax somewhere else, you are not under in my purview. So Indian company registered there, paying taxes there, have complete presence there, is not coming under here. Because of this provision, they will go out. Next, they said, okay, if you are a licensee, they covered everything, right? Even a LLC company, if I have a small store sitting in UAE, I procure locally, I sell locally, was covered in the first definition because everyone was covered. Every juridical person was covered. And it was basically a LLC company, a small shop, retail shop, which I own. Here, they give me an exemption. This says a licensee, if I'm a small shop owner, wholly owned by any one or more residents. Residents can be a citizen, can be an expat who is sitting in UAE, who is running a business here, can be given can be given a green card saying, okay, thank you very much. You are not required to comply with ESR or do a relaxed compliance, can be given if they are not part of an MNE. What is MNE? MNE is basically the way we understand multinational groups. So a group which is present across geographies is called multinational group. There's a particular definition around it. Right now, not covering it. I'm giving you a simple example. Any multinational corporations having presence across geographies is called MNE. So if you're not part of a MNE and your business is completely within UAE, you are procuring locally, you are selling locally, you don't have any other things to do, then you are out. You are not required to do a rigid compliance of ESR. You just have to file a ESR notification, which Neeraj will cover what you need to do, what you are not required to do, but you are exempted. You can relax, you can have a breathing space. This is where I go out. Next one, it says, if you are a branch of a foreign entity, say for example, if I have a company in India, let's take an example of India. If I have a company in India, I'm creating a branch here. I can create a branch. I can say, okay, I want to incorporate a company in UAE and I want only a branch license. My parent company is there. It does not have a legal standing, but since I want to do operations out of here, I'm creating a branch here. If Indian income tax or Indian tax law says this branch income will be consolidated there, since tax is getting paid there, it will be out of scope of economic substance regulations of UAE. That is what it means. Let me read the line. A licensee that is a branch of a foreign entity, the relevant income of which is subject to tax in the jurisdiction other than the state, then that will be out. Please remember, my friends, we started with the notion where we are covering everything, all the juridical person. Now we are giving green cards to ones which we don't want, which we know will not serve any purpose, asking to do a ESR compliance, rather increase my cost of looking after them, doing the administration for them. So I'm giving them green cards and saying, please go out. You are not required to do. Last card, which is basically any law does that, it has kept one card with himself that if I see something else and if I want to exclude someone else, I will have the power by giving a cabinet decision, I can take them out. That is basically a card which they keep in their pocket to ensure that if something is required in future, they can give exempted license to more such licensees. So licenses covered. Now we know what has gone out. Complete change. Initially, it was only government companies. Now you are also going out. I mean, if you're a local business, if you're investment fund, if you're getting taxed somewhere else, you only have a branch. We had a notion what to do. Now it's pretty clear. Please don't worry. You are not required to do a rigid compliance of ESR. It can only be a notification filing if you are earning some relevant income here. That we'll discuss in detail. This is second definition, which has completely gone for a drastic change. I go to the next one, connected person. Before I explain connected person, I always talk about in law why I need to know. I need to know licensee because I need to see whether I get covered or not covered. I've seen the licensee definition. I have seen exempted licensee, what goes out. Now, why connected person? I told you, remember a chain, right? This was the chain. The chain was headquarter and distribution service. Out of 9, these are the 2 relevant activities where you get into a relevant business if you're dealing with foreign connected party. If you're not dealing with foreign connected party and you are into a distribution service center business or a headquarter business, you have a good chance that you are not required to do an ESR. That was why I created a chain. Chain means related party. Foreign connected party and connected party. If you're dealing with foreign connected party, these are the only out of 9, 2 relevant activities. If you're not dealing with foreign parties, you can come out of ESR. There's a high probability, high chances of it. That is why I created this chain. Others, even if you're doing locally, even if you're doing foreign, you may have to report, you may not have to report. Here, it's clear foreign connected party connections is only going for reporting, right? Earlier, the definition was a natural or juridical person. You know, since in licensee, we have taken out natural. Obviously, in connected person, I cannot keep natural here. So they have modified the definition. They said an entity that is part of the same group as the licensee or the exempted licensee. We have seen the definition of licensee. We have seen the definition of exempted licensee. We know what exactly it means. What is this group? I'm not clear with what is this group. They went ahead and said group means what? Group means 2 or more entities related through ownership or control such that they are required to prepare consolidated financial statements, CFS, consolidated financial statements for financial reporting under the accounting standard applicable there too. It means now they are also clubbing as authority, they are also bringing in the compliance. They are also understanding the importance of accounting. They are saying, okay, if as per the accounting standards applicable in your country, if you're required to produce a consolidated financial statements, then obviously it's all those companies which you're consolidating becomes a group. And if you are doing a transaction with them, that is called connected party. And if it's a foreign party, it becomes foreign connected person. That is how the definition is if you have to do as per the accounting standards. There's still some ambiguity here. That is, if say, for example, in a country, if as per their accounting standards, I'm not required to do a consolidation, but I know that there is control prevailing, there is ownership prevailing, will I take the virtue of this group definition and come out? I don't know. Right now, this is an open question based on the law released, but there's one ambiguity because they have said where only the accounting standards applicable there to requires you to consolidate. If that is not there, I still have gray area there. We'll see how exactly it will unfold. But right now, if 2 entities are connected because of CFS, then they will be called connected person. Otherwise, they will not be called connected person. We went further and they said, what is foreign connected person? Earlier definition was resident, not resident, deemed resident. They are pretty clear now. They said connected person is that is not tax resident in UAE. If you are not a tax resident in UAE, I can call you foreign connected person. You might have a location here, you might be considered deemed resident, but if you are not a tax resident, you are not paying any taxes here, you're not a tax resident here, I will say you are a foreign connected person. And any dealings, why I need to know about foreign connected person, if I do any transaction with this party and it is falling under service and distribution or headquarter business, it is 100% will be a classical case of economic substance regulation, and I will fall under economic substance. I move on. There are certain relevant activities where the definition has changed. One is distribution service center, major change here. Earlier, the definition was, remember, I talked about masses. This is about masses, where exactly mass gets impacted. Earlier, the definition was this. Let me read it out. Let me just change the video screen here. Yes, purchasing from a foreign connected person and importing and storing in the state. Mind you, this is initial definition, not now. And importing and storing in the state component parts or material for goods or goods ready for sale and reselling such component part, material or goods outside the state. 2 things have changed. Please look at your screen. This has been cut out and this also has been cut out. Let me reread the line. Purchasing from a foreign connected person component parts, material goods or goods ready for sale and reselling such component part, material goods. What exactly it means? It means high seas sales and local sales if done through a foreign connected person, will be covered under ESR. Completely changed. Earlier, third port shipments was not coming out clearly because importing was a condition there. Law is as law is written. It is black and white was written importing was considered the same way. Now it is pretty clear. Third port shipments will also be clearly covered. And even if you purchase from foreign connected party and sell it in the local market, there are chances there are not chances, you have to comply with economic substance. This is a major change. Please make a note. And if you have not done the notification filing earlier, now you will have to do it. Please ensure you make a compliance here. I go to service center definition. This was the earlier definition of service center: providing services to foreign connected person. What is foreign connected person? I told you, when we are preparing a consolidated CFS, all those entities and who are not tax resident of UAE are called foreign connected person. That is an entity in England, America, anywhere. And if we are required to prepare CFS as per their law or our law, anywhere CFS is required to prepare, they will fall under this definition. In a connection with business outside the state. So say for example, earlier it was, if I'm billing to a France company for a business done in UAE, I was out of the ambit of economic substance regulation. They have deducted this word, they have cut out this word, and then they said that if you are providing services to foreign connected person either inside or outside the state, you will be covered under ESR. That is what a major change has come in. Now service center and distribution is a major gap. MAS was following it. MAS has concerns about it. Not only us, OECD had concerns about it. So it has gone for a change. Please relook at your notifications. You might have looked into past and someone has told you are not required to do a compliance. Now with the change definition, you might be falling into it. I go to the next relevant activity. It talks about holding company business. Not a major change. According to me, the intent remains the same. It's the wording changes. Earlier, they used to say specifically and at the end, see on the cursor, does not carry on any other commercial activity. Now they has just saved on the words. I can say they are just saving on the words, and instead removing this, they included sole function. It means the same. Either you say sole function or does not carry on any other commercial activity. Intent is same. It's only saving on the words. That is what they have done. Otherwise, holding company definition remains same. Holding company has only one catch. That's like a trump card. You have to do a little compliance. If you are only a holding company, you have to do a little compliance, and that is where I don't see a major change here except the wording, change in wordings. On lease finance, I mean, we were pretty clear from the first day. Everyone was clear that three things are not covered. One is operational leases are not covered, rental equipments are not covered, and this hasn't made clear. They said there was some ambiguity because there was a FAQ or there was some document in public domain that says renting of asset or equipment is covered. When we talked about renting, everyone was worried that operating leases are covered in ESR. Now this has been clarified. Rather, by clarification, they have removed those renting of asset or equipment, and now lease finance only means financial leases. They are only talking about financial leases and cash pool arrangement. My dear friends, cash pool arrangement happens in many companies, multinational companies. What do? You have 20 entities across the globe, across the geography. What you do, you pull the funds in one account, and as and when required, you push the funds to your different companies, right? If you do this activity, there's no problem. The problem is when you pass on the interest benefit. That entity whose CEO is sitting in that region says to you, that was my funds. You have taken that, you have pulled those funds into a main account, and now you are utilizing the funds. I need interest income out of it. When you are giving this interest income, then since you have generated income, you will fall under lease finance. If there is no such arrangement, there are companies who just pull the funds, keep it centrally, required, then gives back to the different entities. They don't generate income in terms of interest and anything. They are not getting covered under cash pool arrangements. Cash pool arrangements will only get triggered if you are generating interest income by pulling the funds from different organizations, and then whenever required, you are giving them along with the interest, or whenever they demand, you accrue the interest in their books. Then lease finance for cash pool arrangement will get triggered. Again, it is with central bank. There's no change there. How exactly intercompany loans will be reported, assuming since there's a single authority which has come in, which Neeraj ji will talk about, you will understand how exactly the intercompany, intercorporate loans will be covered. There may be the catch that single authority coming for access, reviewing your documents will ensure that you do the compliance for lease finance for intercompany loans. Intellectual property, big area where economic substance plays a big role. I mean, I will say this was the crux why economic substance started getting attraction, because geographies felt that intellectual property is one area where companies are playing around and parking the revenues across the region, across the tax havens, and are saving their money from the taxes. This was the big area. And intellectual property, again, they have deleted some words. They have deleted this line, does not carry out research and development, branding, marketing, and distribution. They have remodified the SIGA definition. They said, okay, for them, SIGA definition includes strategic decision, development, and subsequent exploitation. You either develop, I mean, as say, for example, how do you park the money? I have done the intellectual property work here. I know all the income which I'm generating here will be taxed here, assuming there's a tax of 30% here. I used to book a rental, or not rental, I will say a royalty. I used to book a royalty and shift the profits to tax havens, and these royalties were going to companies which was nothing more than a letterbox. I mean, if you go there, investigate, you will not find anyone. It was a letterbox and a copper plate lying there in the residential buildings. This was the offices staying there. They were taking the entire income booked there, and you are booking expenses, saving 30% of the taxes. So they said, in case of IP, we will look into whether where you are booking the revenue, you have the decision powers, managing powers for development or exploitation, or it's just a letterbox. If you're acquiring third-party IPs and dealing with it or not, or you are doing further trading activities, or it's just a small office in a residential building, a small room has been taken, a nameplate is there, nothing, no employees, no decisions, only revenues getting parked. All these shell companies getting targeted by this definition of SIGA for intellectual property. One more, they said they are pretty clear, since it's a vast area, there are multiple manipulations they have seen in the past. They have used the gross word, said if licensee has manipulated its gross income to avoid being subject to economic substance requirement, they can take the actions they want. So they have use the word manipulation because, our mind as human beings is very creative. We come out with some solution or the other. That is why they have said if there is any manipulation which they come across, they will ensure they will take the actions as they want it. Few more definitions has been added, not adding more value to it. So I've just put it on the slide. These are the definitions which has come into the picture. If you want to go through it, take the copy, go through it. Small definitions, not major impact, but the major impacts I've already covered. Last slide from my side, and then I will give it to Mr. Nirav. Branches, let me tell you why exactly the branches came in and why exactly this is a major change. Earlier, when ESR notification was supposed to be filed in June, our concern was whether one entity has to file, and if one entity has 5 branches, whether all 6 notifications should be filed, because everyone has a separate license, because licensee word was used, and licensee means each license holder. That is where the confusion was there. Now they have clarified. They said, okay, if there is a UAE branch of a UAE parent company, a single notification filing, a single compliance is required by the parent company, and we'll assume that all the branches has been catered, which is very logical because branches do not have a decision power. They don't have a separate legal entity. They are working on the directions of parent company. They are just a branch. As you say, it's a branch, it's a child element. Parent is parent, right? So that is now clear. If, say, for example, if I have 100 branches, one parent company, I'm not required to do 101 compliances. I will do one as a parent company as a compliance, and all 100 are covered there. It has repercussions. If branch does a non-compliance and parent reports it, parent is under scanner. But for now, a relief is only parent, one single compliance. Again, logical, UAE branch of a foreign company is there. They have created a branch here. We discussed about it. We said if this branch who is sitting out of UAE, its income is getting clubbed in the other jurisdiction where this parent company is lying, I'm not required to do compliance. I don't want to increase my administrative overhead. Let them do it if they are doing it. So that is what it says. If income of branch is offered to taxation in the foreign parent company, then UAE branch could be regarded as exempt license and can go for reduced compliance. Last part, foreign branch of a UAE company. So I have a UAE company and that foreign branch is sitting outside there. This is just a mirror image. I call it a mirror image. Now, if UAE company is here, foreign branch is sitting somewhere else, and that income is getting taxed somewhere else in that branch where it is situated because of the country law there. Every country has its own law. The income is getting taxed there. I'm not worried. I'm fine here sitting in UAE. I don't want their compliance. That will go out. My administrative burden is reduced. That is what the intent of law is. With this, I've clarified all the 3 parts of branches, and I'm done with my presentation. Neeraj, over to you. What exactly we need to do in terms of if we don't comply, and what we should be taking caution in terms of reporting and notification filing with the deadlines.
Sure. Thank you, Joy, for power pack thing. Now, if you can stop sharing the screen, then I'll move on to.
Sure.
Yeah.
Yes, sir, done.
Okay, thank you all for joining for today's session. Again, we just wanted to take you through the changes, but our focus remains on what one should be preparing when we are now very near to the deadline of filing the first economic substance return or report, as they call it. So again, briefly, some changes on the penalty side. They've increased the penalty. Penal provisions. So failure to notify, earlier there was a range of 10 to 50,000 dirhams. Now it is 20,000 dirhams. Again, first time if you're not meeting the test, there's a fixed penalty of 50,000. If the default continues, then there is a penalty of 400,000. And of course, then you have a risk of non-renewal of license or deregistration. If you don't provide accurate information, also there is a penalty of 50,000. There are other things. I'm not going into that detail because I want to focus more on few interplays. So there are now, earlier we only had two authorities. One was the regulatory authority and other was the Ministry of Finance, which was the final authority on the subject. Now they've introduced one more authority, which is called National Assessing Authority. So in the new regulation, now they've defined very clearly the functions of each of the authorities. So when we come to regulatory authorities, their functions are defined very clearly that they will be collecting information. They'll ensure that it is complete and the notification file is correct. And they will also review an assessment or review that whether if you want to apply as an exempted licensee, have you submitted sufficient information and to evidence that you are eligible for exemption or not. And then they'll provide all the information to a new authority called National Assessing Authority, which has been the Federal Tax Authority has been tasked with that subject as well. Now, FTA, again, under the ESR law, this is not supposed to be bound by the tax procedure code, and therefore what you have normally for your VAT appeal and assessment and all that will not apply here. And very clearly the role of FTA has been identified as they will take the assessment of whether the licensee or an exempted licensee has met the economic substance test or not. And they will be the one who will be levying administrative penalties and hear and decide on those appeals. And they will be the one who will compile the information which the competent authority, which is Ministry of Finance, will be exchanging with the other countries' competent authorities. Here, competent authority earlier was going to share information in the first two cases, which is high-risk IP license and license that has not met the economic substance test. In the amended regulation, now they've expanded that even the exempted licensee that is tax resident in a jurisdiction other than UAE, that information will also be shared with the relevant country. And if it is a branch of a foreign entity which is subject to tax in other jurisdiction, then that also will get communicated through the competent authority. Again, small changes, but very relevant, and therefore we thought we want to highlight that. Now, let's go to the economic substance report. Now the law is very clearly defining of what they want as information in the report. Of course, the format is not yet out. But if you go by Bahrain and other countries which have issued the format, they are going to be exhaustive. And if you look at what is the information that is required, here is the overview. So one, you need to say what relevant activity you conducted, amount and type of relevant income that you earned. Similarly, amount and type of operating expense and assets in respect of that relevant activity, location of place of business, and if applicable for your relevant activity, the plant, property, equipment used, number of full-time employees with qualification, and number of people who actually carried on the relevant activity. What is the SIGA that you consider to be the core activity which generates the income for you? Very importantly, now they've added financial statements as one of the requirement as part of the report. Again, here they have not mentioned audited financial statement, but a financial statement is definitely required. And therefore, whether an audit is mandatory or not, that they have not touched as a matter of mandatory requirement. But now, if you have to qualify economic substance test, along with the filing of the report, you will need to attach your financial statements. Okay, and there's a declaration whether it satisfies the economic substance test or not. So again, we'll go back to see what we have seen earlier also. What is an economic substance requirement? There are three main pillars around that, which is directed and managed in UAE. The company should be carrying on its core income generating activities in UAE, and companies should have adequate level of qualified employees, premises, and annual operating expenditure. Let's go into each one of them, because now the regulation and the law together have made some of the requirements clear of what they are looking at, what they are not looking at, what is it that they are going to consider as being relevant. And therefore, let's start with first the direction and management. So if a company wants to be treated as being directed and managed from UAE, what is it that it needs to demonstrate? First thing they say is that there has to be an adequate number of board meetings to be held and attended in UAE. What does that mean? That, okay, we'll come to those. So how do you determine what is adequate number of board meetings? One, it will depend on your relevant activity. So if you are purely a distribution company, you may not need a very frequent board meeting, but if you are a headquarter company, you might be required to have more board meetings and so on and so forth. If by constitution, by applicable law, if there is a prescribed minimum number of meetings which are mentioned, so most of the free zone only mandate one AGM as the minimum required, nothing more than that. But if there was any additional requirement, then due consideration will be given to that also. Further requirements under direct demand test is that the meetings have to be recorded in written minutes. Such minutes have to be kept in UAE. The quorum for such meeting has to be met, and those who attended has to be physically present in UAE at that point in time, on that day. The directors need to have necessary knowledge and expertise to discharge the duties of being director, and there should not merely be somebody who is not so qualified or just an accountant designated as a director to show that yes, he is present here and he is doing this. But if he is not competent, that also will be looked at. There are other things like minutes must record all strategic decisions taken in relation to relevant activity. It has to be signed by directors who are physically present in the UAE. Quorum will be determined as per again applicable law. So if in your constitutional document, say a lot of LLC companies say that for AGM you need to have minimum 75% of the members present. So those quorum which are prescribed by your constitutional document will become applicable for your minutes and for your meetings, and those needs to be fulfilled. And those also need to be recorded. Again, it does not prescribe that all your directors have to be a resident of UAE. What it does prescribe is that they have to be physically present when those meetings were held, and at that meeting is when the strategic decisions were taken. So again, focus on physical holding of meetings and physical attending of those meetings. So by corollary, would a video conference suffice? It may not suffice to meet these requirements which are there in the guidelines. So a video conference meeting or other mode of video calls today and all of that may not be sufficient as per the current version of the regulation which is there. Okay, and when we have a lot of time we have argument that okay, I don't have external directors, but my shareholder or my owner, my partner is the one who hands-on manages the business. So again, the same requirement that we have for director to show that it is directed and managed from UAE, the same will apply to those shareholders and owners, and they will have to fulfill the same requirements to the fullest extent to show what is directed and managed. Again, this was the main crucial part of how to demonstrate one part of the substance, which is direction and management of the company being in UAE. Now, if you look at the next part, which is SIGA, there are very important points which are mentioned now. So, what is SIGA? So, they are saying those activities which are of central importance to licensee for the generation of gross income earned from its relevant activity, they are going to be called as SIGA. What list that they have given in the regulation is not an exhaustive list. And these are only examples of the activities commonly associated with each relevant activity, and they are not exhaustive. So you could technically argue that, okay, for my business, while you have mentioned 1, 2, and 3 as the SIGA in the regulation, but according to me, according to our industry practice, this is the most important activity, and that is the one I do here. And therefore, that also may be accepted, provided you prove that. Next is performance of the SIGA has to be from UAE. So license is not required to perform all the SIGAs which are mentioned. So whatever is the relevant and most important need to be performed, but that performance has to be in the UAE, which helps you, like they said in the first part, the central importance to licensee for generation of gross income. So that which is the most relevant activity needs to be performed only from UAE. So it has to be performed either directly or through an outsource arrangement also. That's acceptable. But then if you are outsourcing, we'll come to that as a separate slide, but if you're outsourcing, then that outsourcing partner also needs to perform the SIGA at least from the UAE and not from somewhere else. Non-SIGA activity, non-core activities you can undertake from anywhere else, and that can be outsourced to third parties outside of UAE as well. But whenever it comes to SIGA, you only need to be very, very careful about this. So again, from the earlier law, now it is very clear that the list which is provided for core income generating activity for each of the relevant activity, one is that you don't have to perform all of them. And two is that you can, this is not a mandatory or exhaustive list, and therefore you can add one or more core activity that you do, which is central to your business as part of the SIGA, right? So this is two very important aspects, and one must remember this. Again, documentation of all of this and demonstrating that this is important for me and not something else. How do you establish that this activity is more important for me than for anybody else or for even my competitor? So again, a documentation, a trail, a record of that, and showing it to the authority that you have taken due care around those. Third most important part is adequate resources. Here they went ahead and gone ahead and clarified of what all they are looking at. So in terms of people, they want qualified full-time employees to be present in UAE. Or if you don't have full-time employees available, you have to have personnel available under contracts who are qualified to carry on the relevant activity. National Assessing Authority, NAA, they may consider even the timesheets or other evidence of relevance when assessing the adequacy of people. They may also look at hours spent or an average revenue per employee kind of a yardstick could also be applied, that if in your industry for carrying on X amount of work, the average revenue per employee is X, have you actually earned that or you're earning more or less? So that's again another important aspect one needs to keep in mind. Premises, they said office or other form of business premises, which could be warehouses or any facility, even a business center from which activity is carried on. It could be owned or leased, as long as you have a lease agreement which proves that you have right to use the premises for carrying on the relevant activity, that should suffice. So again, that important piece is the document that you should have. And operating expenses. Again, here they have left it open to say it has to be adequate. What is clarified is that idea is not to mandate a minimum level of expenditure, but to demonstrate that the activity was actually carried out and all necessary expenditure, required expenditure were incurred for carrying on that activity. So there are a lot of soft aspects that have now been clarified, which can easily give an idea to an organization, to a company, that if I'm carrying on X activity, what's the level of substance that I will need to demonstrate and how. So these are some of the yardstick that one needs to start looking at and applying, because now we are less than 4 months away. We are on 20th of September. The first due date for filing this report is 31st of December 2020 for the year that is ended on 31st of December 2019. And therefore we are less than 4 months, 3 months and some days away from that. And this again is for the financial year which is already passed, and therefore one never had this practice of keeping all these documents in so much detail in UAE. That's the challenge, and that's why one needs to start compiling and keeping this in mind well in advance. And what is one going to see in terms of National Assessing Authority? They are going to look at documents. They are going to look at evidence of how do you establish this. So that's why we thought this is most important to highlight. In terms of outsourcing, licensee may conduct all or part of the CGAs for relevant activity through an outsourcing provider, maybe related or a third party. But outsourcing provider has to have sufficient employees, expenditure, and physical asset to provide this service. There should not be any double counting in terms of resources. So same person cannot be working for 2 or 3 different companies at the same time. And licensee is required to ensure that there is no double counting. The licensee should be able to supervise this activity in UAE of the carrying out of the SIGA by an outsourcing provider. The SIGA that are outsourced must be undertaken in UAE only. Accurate reporting onus is on the licensee. It should include precise detail of level of resources employed by outsourcing provider, for example, timesheets or others. And one should consider having a service agreement which specifies or mandates all of this for demonstrating substance. So these are the most important aspects. We are now reaching almost 45 minutes. Let me just conclude with giving you a few of the action points as a result of all of this. And then we can take up the questions that you might have. So what's most important? The law has been replaced. The earlier filings are now actually stands redundant. Okay, so one first needs to look at, we review your earlier filing in view of the new legislation. And then you decide whether all the old notification you may need to file again on MOF portal once that is available, as is going to be applicable. Evaluate whether one can be classified as an exempt licensee in view of the expanded criteria of being an exempted licensee. And most important is now review the preparedness. If you know that you are carrying on a relevant activity, if you know that you are going to be required to file this report, start preparing. This is the time when you need to start doing these things, because there are exhaustive set of documents you may have to demonstrate or collate, as I mentioned just in the last few slides. And there are enhanced documentation requirement for demonstrating substance. So that's what we would recommend strongly. Some of the issues we'll come to know over a period, and we are hoping that with National Assessing Authority role being given to FTA will be as proactive as it has been at the time of BAT implementation and issue clarification or guidance so that there is consistency in terms of application of the regulations. So simple thing which was a confusion earlier also, whether all my licensee needs to file the load notification or only those which are carrying on the relevant activity. Will FTA issue clarifications on gray areas? Will regular reporting be on the portal which is going to be the developed, or you still have to file to regulatory authority? Because as we saw in the functions, that regulatory authority will be the one who will examine the first level, whether you're exempted licensee or not. So how will that happen? And since FTA will communicate only through the regulatory authorities, what if there is a gap or time lag in the communication, and who's going to be responsible for that? So again, these are issues which we'll know over a period, but point was that we need to get ready and start taking all of these things very seriously. Now we have detailed aspects which they have clarified of what they are looking at when they are looking at you to establish substance. So thank you all. We're looking forward to your questions, and we'll take it up from there.
Thanks, Nirav and Jay, for this insightful session. Yeah, we can take up the questions now, and we just have 10 minutes to go.
Yep.
So the questions from Facebook as well. So the first question is there any particular template for the report?
Not yet. They have not specified the template, but they have now given very clearly what all they need as part of that report. So the template has not yet come, but what all they need is already clarified. So why wait for the template? At least start compiling those things which are already prescribed, you know.
So next question is, it relates to the actual presence test. How strict FTA will be with respect to the presence of board members?
So FTA is an assessing authority. What we need to look at right now is the law and the regulation. Regulation is very clearly mentioned that you need to have physical presence. So they said they have clarified to the extent of saying that board member need not be a resident of UAE, but at the time when the meeting happened, he needed to be physically present. And the physical presence of board member has been given a paramount importance. And therefore, we draw analogy that video conferencing or other modes of communication of holding a meeting also may not suffice. You have to actually have a physical meeting in UAE.
All right. So Nirav ji, here we have a similar question again to the presence of a board members. Question is, what if out of 4, only 1 member is not present physically? Rest are physically present.
No. So you have to look, quorum has to be achieved. So I don't need all of them to be present for all the meetings. So if you hold 3 meetings in a year, one can be traveling at that time. And if you have 4 members, even if 3 are there, that's fine. You know,
Look, at
as
the end
long
of the day,
as
what matters is intent. Intent is whether you are actually having the presence and operations here, or it's just eyewash. If the operation is somewhere else, it's the company with directors here only taking a decision, sitting somewhere else. The essence, the moment you 3 hours traveling here, having a meeting here, you are and you are able to establish, look, I'm doing a genuine operations from UAE. I don't see a challenge. It's not a rigid requirement saying all 4 should be present there. That is my understanding.
Okay. Another question is, authority has added a requirement to share the financial statements in the ESR report. So is it for a group or it's for each licensee?
no. So again, are you filing or your notification is for the company? Then that for company's financial statement is what is required. For company, what is regarded as a group or a connected person, there is a definition. But they don't want you to file a consolidated financial statement unless it does not it's not relevant for your activity which you are carrying on. See, if I am as a company carrying on X relevant activity, I have to file my financial statement rather than the entire group that I belong to, you know. So again, if you are a parent and you have 5 branches and you're consolidating all that into one, yes, you have to file for that together. But if it is not a branch and it's separate companies, then of course for each company is one that they're looking at.
We have a question. I think Jay has already answered this question. It says we have already submitted a notification. Do we need to file it again, given the changes? But there are no changes in our business setup or anything.
No. So Jay, you can take it.
Sir, I have replied. I mean, look,
Yeah.
you have to refile it. That's for sure. I mean, we are just waiting for the timelines and
Yeah.
the portal. They will come with a single portal most probably. And again, we have to file for 2019. So we have to wait. It's just the law which is out. Wait for some time. I think everything we have to do by 31st December. I'm expecting both notification filing and report filing for the period ending on 31st December 2019. We'll be doing by 31st December 2020. That's my understanding.
For sure, and you might have for the period ended, say in March 2020, you might have even the notification filing becoming due as of say September end, because that's a 6-month period which is now specified in the new law. See, we might get that also, how to comply with that and all that might get that information as well soon, you know.
Okay. Our next question is, my company is in UAE and I have a branch in a no tax country. Do I need to file ESR for my branch?
Sir,
नहीं
want to
नहीं
take
आप
it?
बोल दो आप बोल दो आप
I mean, the slide में हमने cover किया. We have already talked about it. If
Yeah.
branch is outside and it's out of tax jurisdiction, it's in tax haven, you will be covered, because I told you the horizon is all legal entity, all the jurisdiction, all the juridical presence across anywhere in the globe, and then you are given a green card. Since you are your branch is in a country which is tax haven, you are not given a green card, right? So you are getting covered under ESR, economic substance.
Okay. Again, Jay, this question has been answered. If my financial year is ending 31st August 2019, then what will be my ESR date?
Look, logically, when we say ESR, there are two parts to it. As a licensee, we should understand there are two parts. One, that is filing of notification, where we say whether we have generated income out of it or not. Second is reporting or return filing. So there are two dates now for you, ESR. One is 6 months from the end of your financial year. Second is 12 months from the end of your financial year. So if going by the question, if the person is saying 31st August 2019, 6 months, we go September, October, November, December, January, February. 20th February 2020
No,
is
no,
the
no, no,
date.
no, no,
Actually,
no, Jay,
no?
no, 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 no.
Hmm?
So first of all, the law applies only for financial year that begins after 1st of January 2019.
Okay. So
So
we
if
let
your
it.
financial year is ended on 31st August, that means it has begun earlier to that 1st of January date. So for the year 31st August 2019, technically you are not required to do any compliance.
Perfect.
But now when the new year, which is from 1st September 2019 to 31st August 2020, you will have the same date which will apply. So the 6 month will end in next Feb, which is 2020, Feb 2021, before which you'll have to file a notification. And then 12 month is when you'll have to file, if you are carrying on relevant activity, you'll have to file the report.
So person has got a breathing space for 1 year.
Yes.
Okay. Yeah, these are the questions that I have received from Facebook.
Anybody who is live there who wants to ask, they can raise hand and we can take it up. But otherwise, we will believe that we were very clear.
Anyone, any question? It seems there are no questions from the audience. So,
All right.
yeah, I'd like to then thank all the attendees for this
Thank you.
webinar. Hope you found it insightful. And we'll be putting up a recording of our webinar on our website and on our YouTube channel, GCC Fintax. And Neerav and Jay, thank you so much for this
Thank
power
you.
packed webinar.
Thanks a lot. And we enjoyed doing it as much as you. And thank you all for joining and sparing time for this very important topic that is coming up. Yeah. Thanks a lot.
Thank you. Thanks a lot.
Thank you.
Thank you.